3 hours into trading. It is Thursday, September 30th, the last trading day of the month. Hello, traders. I'd like to start off today's presentation by just saying that there's a lot of BS on YouTube. You don't know who to get your information from. What I try and do is I don't show you a bunch of cherry picked trades from the last week or two that I highlight. I show you trades in every single video, and then I follow up the next day and I show you how they worked, good or bad. Fortunately, the vast majority of them work out really well. It's the same way with my market commentary. Each day I produce market commentary. It's free. Again, I'm trying to educate you on what the market is going to do. So yesterday on the close, I had mentioned in my chat room that I felt that the price action was actually more bearish than bullish. I try to get pieces of information every single day based on the price action. Why did I feel that way? Because you could look at this and say, hey, wait a minute. Bulls defended the 100-day moving average for a second straight day. That's pretty good. Bears would argue, though, you could not get through this 437 level. You could never get the market off the deck today. The selling pressure was so strong that sellers played whack-a-mole every time the market tried to get past that 437 level. They defended it. So the sellers were actually quite strong. If I look at a daily chart, you can see that this long red candle that we got on Tuesday, almost all of those losses were preserved yesterday, Wednesday, and we got almost a doji closing on the low from Tuesday. That, to me, was bearish. In the past, every time that the market has had a big drop like this, buyers have come in relentlessly, and we'd only get a couple of days of selling, then blam, right back at it. This is stronger selling pressure than we've seen. This was a nice little bounce. But I've also been telling you in the last couple of weeks, upward sloping trend line, that this bounce was going to attract a lot of bullish speculators and that they were ready to get flushed out of the market. Because unlike these other bounces here and here and here and here, this is sustained selling. I did not know what would happen off of this drop. I didn't know how far down we would get, but once I saw that action Tuesday, yesterday was particularly interesting to me, and that's what got me swaying to the bearish side. So if you go to my blog, www.oneoption.com, use the number 1, you're going to see my pre-open market comments today. Don't trust the market bounce this morning. The selling has been heavy. And click on that article, you'll be able to go down and see all of my comments. They are extensive. I spend about 2 hours before the open each day going through market analysis, fundamental and technical. Here's the section for day traders. Day traders should favor the short side. I don't believe the early gap up is going to hold. The best trading scenario for me will be a wimpy rally on the open, tiny bodied candles. When that rally stalls, I'll be looking for signs of resistance at SPY 437. Ideally, 10P will spike in the first 30 minutes and we'll see a bearish cross. That will be my entry. If I see that, I'm going to start shorting. I also outlined a couple of other possible scenarios that I thought were likely, one being a gap reversal with long red candles closing on their low and what that would mean, and another one where we had compressed tiny bodied candles and a tight trading range like we saw yesterday. So I already know before the open what exactly I'm looking for. So I'm going to go into my chat room and then I'm going to give you a little bit of play-by-play commentary from earlier this morning so that you can see how everything unfolded. So there are my daily market comments and same ones that you just saw in my blog. And I'm showing you that a few minutes after the open, I start seeing what I believe is going to be a nice pattern. So first of all, the long red candle that we saw was a warning sign that the selling pressure is heavy. And there you can see that 15 minutes after the open. The red candle today off the high on SPY is a sign that there are sellers. Okay, warning sign. So now all of a sudden I'm thinking, yes, I think my scenario is going to play out. And now we continue to scroll down, ready to short the S&P. This is 30 minutes into the open. And my 1OP indicator is starting to move higher, short SPY at 435.70. Very, very choppy price action. So I'm scaling in and I'm using smaller size. I added here and I added here. So on this first leg, I said I'm trading smaller size so that I can use wider stops, and I'm looking to make 15 points on the S&P 500 futures contract. And here you can see I am bidding, and I use the I use the SPY simply because not all of my members have real-time futures data. Everybody has real-time SPY quotes. So I show these levels, but I'm actually trading the S&P 500 futures. I was able to close that down. That was a nice trade, 15-point gain. Now, I said the initial move here on the open, I want to see, because this is a real battleground. This is a tug of war that's taking place, and I can already see that by the long candles. But with every passing minute, I'm going to be able to get a better and better feel for just how strong the bid to the market is and just how strong the selling pressure is. And it didn't take long for me to see that the market was going to crumble and I was going to start shorting. And I'm trying to find out where that next short is because I am still short the S&P 500. And I believe that came in. So there's my target hit for $1.50 gain on SPY, which is 15 S&P points. And it continue to scroll down. Again, I'm just trying to prove to you, I want you to know that this is actually happening, and I'm giving everyone the play-by-play. So we touched the 100-day moving average there. This is the setup I'm looking for. I want this tiny little bounce for 15 to 20 minutes. I want it to be shallow. I want to see this little bullish 1OP cross that produces little to nothing. Then the next bearish cross will send us through the low of the week, through that 100-day moving average. And so now we're just waiting. And I'm noticing that the QQQ is actually pretty relatively strong. And I'm looking for that short. This is the wimpy bounce that I was looking for, and I am short at 433.40 on my first leg, and I added progressively. My short on the S&P E-mini is 43.40 on the December futures contract, and I am currently short that. And so now we start getting into some selling pressure, and I'm advising everyone, don't get cute with this. So you don't want to try and take profits on the way down because this is a major breakdown. If you just turned your screen off and walked away, at the end of the day, you'll be happy that you didn't try and monkey around with this position. So now let's go in and let's take a look at what's actually happening. So in here, I've mentioned to you that the losses from this long red bar were held and that we had a doji that was close to the low from this bar. That tells me that the selling pressure remains heavy. That's why when I saw this gap up today, this would be an excellent entry point for a short position. Let's go into the 5-minute chart, and this is where we're going to see the price action actually unfold. So we get this little pullback early, and then here we go, marching. We're right up to that. You guessed it, 437 level. That's the resistance level that I was looking for the market to try and challenge this morning. We don't even get there, and what happens? Blam! Long red candle. Almost, well, it is a bearish engulfing candle for this tiny green candle, but it almost engulfs both of these candles. That's the commentary that I put out to my members, and I said, listen, that's a warning sign. That tells me that this rally, this bounce on the open is in danger. So this is where I start adding to my shorts, and you can see that the ranges on these candles are very wide. That's why initially I took a very small position. So I had to weather a couple of big moves in here, but that was fine because I was using smaller size. I wanted half of this red candle to be preserved, which it was, and then I hit my target on the S&P 500. I made 15 points, and I was looking to take my gains right here near the low of the week. Cool. So we actually get a little bit of a breakdown and we test the 100-day moving average. This is the commentary that I showed you in my chat room, and I said, here's what I want to see. I've got my bullish 1OP cross. I already know that there's some heavy selling pressure in here so far today, so we could expect even a bearish divergence, meaning that one OP goes higher and the market goes lower. And we get our bullish cross in here, and that's exactly what happened. So now I said what I'd like to see is a tiny little bounce that tries to shake out these bears right in here that lasts 15 to 20 minutes. So we get about 20 minutes into it, and then there's a long bearish engulfing candle. Long red candle, bearish engulf, barely even got off the deck. This is when I started shorting aggressively, and then wham, we get this long red candle. This was the tell. This told me we're taking out the low of the week. We're taking out the 100-day moving average. Buyers are stepping back. They are not going to be bidding for stocks when they see this type of price action. And there you can see, if you're an asset manager and you're asking yourself, gosh, I've wanted to buy, I wonder if it's time to buy. Well, I told you the scenario that they'd be looking for is a pullback, not a long red candle like this. No, no, no. They'd be looking for a nice little pullback that finds support above that 100-day moving average, well above that 100-day moving average. And that would be a double bottom higher low, and then we start creeping right back up to that 50-day moving average. That type of move they would have embraced. The fact that we sold off hard to the 100-day had them wondering if the selling pressure was great enough to push us down below it. Yesterday's price action was enough evidence for me. Now, with today's price action and them seeing this long red candle here, they know that there is some serious selling pressure. I'm going to click GTC, going to click that low right there. We want to see that breach today. I don't believe that's going to be much of a problem given the price action so far today. Now, let's talk about how do I get the maximum out of my positions? Pete, I always seem to be closing these things down prematurely and I leave a ton of money on the table. How do I correct that? Well, you have to put the market into context. Right now, we are making a new low for the day, or we did here. We made a new low for the week. We're challenging the low from last week, and you can see these long red candles. When you're breaking a 100-day moving average like this, that tells you this is significant. This move has a chance to continue for a very long time. And buyers are not going to be aggressive when they see this type of price action. So you want to try and ride the position out. Earlier today, we had a couple of pauses. What typically happens, and I do this all the time as well because it's prudent risk management, when you get a big drop like this, and you start pausing and you see a green candle and then you get a doji closing on the high of that candle, you're expecting that this is going to be a pause. We're going to get a little bit of a market bounce in here. And then when the market starts to roll over, I'll start looking for another opportunity to short. Here's the problem. Blam. Uh-oh. You get this big red bar and then another red big bar. Now you're on the sidelines going, now what do I do? I just missed a huge chunk of this move. And I'm not short again. Do I short here? I don't know. So this is a little bit organized. We're seeing a little bit more of a pause in here. Now the tell is also what I call marginal new lows. So in this particular instance, you sell off and you bounce, but the next low is not that much below this low. Okay, then you get another bit of a bounce, and then the next low is not that much below that low. So these are marginal new lows. These are signs that support is forming. Even the fact that you have a little bit of a choppy move lower with green candles mixed in here, that also, we're pausing. Little drop, pause, little drop, pause. This is not good. This is not strong selling. And then here we got a long red candle, and then boom, 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 we're all the way back. What you want to see is you want to see these dips be very brief and very shallow. That's a sign that you've got steady selling like this. Lots of red candles, 20-minute pause, see you later. Not even a 20-minute pause, see you later. Big drops, meaty drops between these new lows here. That is a sign of strong selling pressure. 1OP, what do we got going on there? We got a little bit of a bullish cross right in here that's taking place. When we get that next bearish cross, we should have another nice leg lower. So for those people who are taking profits along the way, who think that they can time this, you're looking at a bearish cross coming up, and we are likely to have another leg lower. What's my trade of the day? Be short the market. Be short S&P 500. This is not the type of move that is going to produce a V bottom low. Not yet. Might it happen today? I don't know. I'm really doubtful of it. And the reason that I say that is because you've got these big, monstrous new lows in here. Not marginal new lows, big lows with very heavy selling pressure. So as this move continues to unfold, when you start to see heavy, heavy selling pressure like this, it's not a down V bottom right back up again. It's a bottoming process that has to take place. So you've got one attempt, another attempt, another attempt, another attempt, very much like this. Let's say that this is unfolding towards the end of the day where you get, okay, another new low, but barely, another new low, but barely, another new low, but barely. Okay, when you start to see that type of price action, you should start thinking about taking some profits, especially when these bounces are lasting more than 20 minutes, 30, 40 minutes. Now you know that buyers are in there and they're supporting it. And then finally, there you go. There's your nice little release off of that low, and you're glad that you took profits. But you're going to see this type of price action. Wait for those signs and then take your profits. On a day like this, it's almost best to turn off your computer screen and to just look at what happens in the last half hour and take your gains on your short position. But there's a pretty good chance that we're going to see some nasty selling over the course of the next few days. We do have beginning of the month fund buying that'll come into play tomorrow and a little bit next week. We've got earnings season coming up in a couple of weeks. That should be bullish. But I'm going to just look at price action right now, and I'm only looking at what's going to be happening today. If you've got massive profits today on the closing, you start to see these marginal new lows like this, at least take gains on half of the position. We are in a 12-year bull market rally. We are in a 16-month bull market rally. So you can expect that pretty much every time you see heavy selling like this, what's going to happen the next day? You're going to get a little gap up like this, and then they're going to test the bid. So carrying an overnight position, yes, you could possibly miss that big, big drop, but chances are if we close very low today, you're going to get a little bounce tomorrow. You'll be able to evaluate and you'll be able to reload your shorts at a better price. So try to ride this out. You can see right here, if I'm getting cute and I'm exiting right in here or I'm in here, oh gosh, that long green candle, that scared the heck out of me. Look, it went up more than half of that red candle. This is no good. I'm going to take gains. Man, I made a lot of money on this. And then all of a sudden, boom, you get this red candle and another red candle, and you're out up here and you're going, doggone it. How did that happen to me again? This is one of those days when you can ride the trade. You've got a really strong downtrend on uh, the short that you're in, and you've got major technical support that's been breached, and you don't really have any technical support. This would be about the first technical support that I see, this horizontal support level right here. You can see that's your first support is the low from last week. Take that out, then your next support is here, and then it's the 200-day moving average. So try and ride your short positions. Ultimately, if you're a longer term swing trader, you know I've been looking for this market pullback. September and October are weak months. I think that we're still going to be setting up for a decent opportunity to get long, maybe toward the back half of October, early November, and have a little bit of a year-end rally off of a much lower level. That 200-day moving average is a 10% correction approximately off the high. So that would be where I think the market has a chance to getting down to. It really depends on what's happening in China. Credit concerns, Fed going to be tapering. That's an issue right now. So good luck with your trading. I hope this video really helps you, and I hope that it proves to you that what I've been showing you day in and day out actually works. Thanks. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.